There's a very popular podcast called The Compound and Friends, and they have good content. So I don't want to be negative about them, but they recently had an episode called Real Men Don't Panic Over Bonds. I saw that title and I was like, what does this have to do with real men? I think they presented it that way for marketing purposes. But at the end of the day, what's happening in the bond market has nothing to do with real men. It's something that impacts all of us.
I really like this quote you found from Kathryn Kaminski. She's a chief strategist and portfolio manager at Alpha Simplex Group. She said bonds are beginning to signal that something is not okay in paradise.
The Treasury auction for the 20-year Treasury note didn't go so well. The rate on the 20-year went up, and then the stock market reacted that same day and went down. It was a negative reaction, right? Didn't like to see this. And so this prompted a lot of talk and podcast episodes about what was going on. Kathy Jones at Charles Schwab pointed this out, that
Yes.
the 20-year is not typically as in demand as other denominations of US Treasury. Another thing she pointed out was that rates are rising. This is not unique to the United States. This is happening globally, especially in Japan.
Makes sense. Isabella Weber brought up some good points about inflation.
She was an economist after COVID who pointed out that companies were driving inflation. Bond investors want to make more than inflation on their bonds. So if inflation is running at 4% and bonds are only paying 3%, you're essentially losing money. If we see inflation go up due to tariffs or other policy moves by the Trump administration, that's going to make it tough for the Fed to lower rates. What investors don't want to see in general is the Fed raise rates even more. Kathy Jones, who I mentioned before, said the United States has picked some fights with some of its biggest creditors. That's not going to encourage them to be buying United States debt. There's so many
Yeah.
factors going into this, right? Another woman named Sonal Desai, she's the head of fixed income at Franklin Templeton. Her quote was that Treasuries are risk assets now.
Good point.
We have investment accounts, right? Treasuries are getting riskier based on all these factors. There are lots of different types of bonds out there. There's municipal bonds, there's corporate bonds, there's mortgage-backed security bonds, all different types of credit instruments that can diversify your portfolio. We did go out of our way to only quote women on the bond market. There obviously are a lot of smart men out there who can talk about the bond market, but we just wanted to highlight them today.
Highlighting that it's for everyone, not just one or the other.